If you thought that last week was a really crazy week in the financial market, then you're absolutely not ready for this week. What's happening, beautiful traders? How you guys doing? I am doing absolutely lovely. We've had a really decent week with just 5 trading days. We managed to capitalize on 3 of those trading days, meaning on Wednesday and on Friday I did not have a setup, and no setup is equal to no entry, no trade. So if I don't have a setup, I am not going to trade. So with just 5 trading days, Monday to Friday, I capitalized on Monday, Tuesday, Thursday, and that was it. I was done for the week. And in these days, I did not trade like 5,000 times. I literally had 3 trades in these single days, right? So I aim to get at least 1 decent trade per day, and I'm satisfied. I'm off the charts. So the lesson is, you don't really have to have like 20 trades on a daily basis. You can get 1 single setup and capitalize on that setup and, stay out of the market. But overall, it was a decent week. And as much as the fundamentals are saying all of these other things, they're expecting the Fed to cut out the rates and, the inflation cooling and all of those other things happening in the US, right? We still stayed true to the trend, and we managed to capitalize. And this week is about to even be crazier, right? So you already know that at the beginning of every month we are going to have NFP, and that's going to be on Friday. On Tuesday, if not mistaken, let me just confirm that. No, that's Wednesday. So on Wednesday we're going to have FOMC, 3 news events: FOMC, PMI, and NFP. I like to really look out for these ones, and if I have to stay out of the market, I will definitely stay out of the market. If I can see a good setup, then I'm going to trade, right? So we're not even going to go on to our investing.com today. You already know that this week is about to be crazy. We have news each and every single day, excluding Monday, right? So just be careful with your capital out there, right? Now, before we dive into this lit video, if you're new to the channel, welcome. We trade the Nasdaq over here. If you're returning, welcome back. You already know what's up. Don't forget to hit the like button, turn your post notifications, and subscribe to the channel. You feel me? And yesterday I managed to make $100 with 1 single setup. And you're gonna ask me how, when the market was closed. Not every single market is closed, right? You already know that the synthetic indices market is always open 24/7, Monday to Monday. And I actually started trading synthetic indices when I started trading. And we have a little love-hate relationship, right? So I used to lose a lot of money there than I lose when I'm trading the Nasdaq. So I really just I was like, let me just stay away from this. And yesterday I was mad bored. I just went and I deposited $93. I want to show you the little strategy that I used to actually capitalize from that. You can see the account is already at 0 right over here, because I took the money out as soon as I was done trading, because I don't think I'm going to actually come back and trade this account. So you can see that we only have 3 transactions that happened, right? It's the first $93 deposit, the second 206 withdrawal, and the trade that I actually took on Crash 300 for $112. It was a really simple analysis. I was looking for a trade on all of the charts. I could not see anything just on Crash 300, as you can see right over here. So obviously when I'm trading synthetic indices, I like to analyze on the higher time frames. I know a lot of people like to trade the 1 minute because of the spikes and stuff, but if you want to be profitable, try and get it from the higher time frames, right? So I went on to my 4-hour time frame right over here, and instead of trying to escape the spikes, I just went with the overall trend. You can see we have a low right over here, and then we have a higher low at the zone. So we have a little zone that the market had broken at this particular zone. Lower, a higher low, and then I wanted to make another higher low after this zone, right? But notice it's actually at a zone that it was trending upward, and then it came and then it broke, right? It was trending upward, it broke the zone, and then it started to want to form a little break and a retest, right? So now what I noticed in synthetic indices, the market does not retest more than once most of the times, right? So it had already retested with the second leg for that higher low that it has. For the third time, I was really, skeptical about it kind of retracing again. So a lot of people would have entered sales at that zone. That was what was making it even more interesting. So I looked at the zone nicely. I can see that, okay, look at what happened. It broke out and then it formed that little, indecision candle right over here. So what you have to do is you have to trade like you're a market maker, right? And if you're a market maker, you don't want to donate money to every single person. You have to think like the person who is trading like that. So if you understand that, you're going to just escape all of these other fake outs and false signals in the market. So I saw this little indecision candle over here. A normal trader is looking at the market that broke out and is retesting. Now, if you see an indecision candle at a retest, you're actually thinking that no, the buyers have lost, control of the market and they want to drop it. Now, at this zone, I waited for the next candle, which is what you should do. Always wait for confirmation. Now, if the next candlestick would have been a bearish candlestick, I would have known indeed the buyers have lost control of the market and taken a sell with the stop loss right above the indecision candle. But look at what happened next. The next candlestick was a bullish candlestick, and after it closed, I entered right exactly at that zone because I knew that it was just a false signal. And look at how it just shot up, and the next time I checked, the account had already doubled, and I just closed the trade, capitalized on that. That was how I made $100 trading the synthetic market in just a single day with one single setup. But now, enough of all of that. Let's just go on to a favorite, which is the Nasdaq. As you can see, I already know that a lot of people were confused with the mad gaps that the market had for this current week. Now, on Monday, we obviously started off with a gap right over here. We did start off Monday with a gap, and a lot of people would be targeting to sell the market so that it can close the gap, right? You can see that Monday we opened with the gap. So Monday we had a gap and it did not close, and then it also opened with a gap on Tuesday, and it also had a gap on Tuesday. Now notice what happened. The Monday gap was actually closed on Tuesday, right? You can see the Monday gap, it went up, it formed another gap, and then so a lot of people, after the gap was closed, they wanted the market to go and close the Tuesday gap, and then the market just dropped down, and it actually formed another gap on Thursday into Friday. So in these cases, right, this is when that statement that the market is going to do what it wants comes into play. Just because you want the market to close the gap does not mean that the market should close the gap, right? So in as much as even me, I was looking at the market hoping that it's going to close the gap. I wanted it to close the gap, right? Where is it? Where is Monday? I wanted the market to close the gap too right over here, but I was not forgetting the fundamentals. I was not forgetting what's happening. So if the market was going to close the gap for this current day, I was still going to look for buying positions. The reason why I did not sell the market on Monday, right, it's because I do not have anywhere to sell the market to. It can just reverse. After I sell it at the zone, it can just reverse to close the gap and go back to the top, right? So at this zone, I was not looking for selling positions, and the gap was telling me to sell, for the market to sell, and then goes and closes the gap. So instead of me looking for the market to close the gap, I would wait for the market to close the gap naturally by itself, and then I look for a buying position instead of a selling position, right? So you can see that the market opened like we had said on Monday, and then it opened with a gap right over here, kind of like, I don't know where you could have probably entered your own trade over here if you wanted it to close the gap, like where, at any random point, for what reason, what kind of selling signal would you have over here for the market to go and close the gap, right? So a wise person here would have waited for the market to just close the gap naturally, and then now look for buying positions in the case that it had come back to close the gap. But it did not, right? It just went up to the top. I think we got an entry right over here. If you remember from the inner circle weekly status, we did have running trades on Monday, somewhere around about here, from Friday around about this zone. So it just pushed down a little bit, and then it just went into profit with us. We added positions at this zone. You can see we have a little range right over here, and we capitalized till about this zone. And obviously I want the market to break out. It did a little bit, and then it retraced. It broke out from here and then retraced and then went up again, and then it then reversed, and everything else is now history. And then it broke out, and then it formed a little gap here, and then it broke out. Now listen, from the weekly analysis last week, I said that if the market comes and breaks out of this zone, you already know that there is nothing holding the market here. It's going to come to this little zone. I remember drawing this little zone right over here, or did I? Let me just confirm that. And then now, if it does not reject at this zone and breaks out, there's absolutely nothing holding the market at this, except for this little, bank zone that we have right over here.
Yes,
so
sir.
if it does break and close outside of the zone, we don't have any reason looking for, further buying positions at that zone. We would actually just want the market to now come back to this particular zone.
So this was the weekly analysis, as you can see right over here, and this is exactly what the market did. It went from this zone. We do not have no reason looking for buys at the zone. If it breaks out, it's coming to this particular zone. And if you had watched the weekly analysis, you would have just taken a sell irregardless of the gap that we have at the zone, right? Because we don't have any reason looking for buying positions at that zone. So
yes, sir. So it was out there for anyone who actually paid attention and, chose to follow what was said in the weekly analysis. It was, just straightforward. Now let's just get into a fresh weekly analysis for, this current week. So we're going to start it up brand new on the daily time frame. Let's do a little top down analysis over here. So we can see that the market went down to this zone with so much momentum, and it should have reacted at this institutional level. But since a lot of people are trading this type of strategy, they literally just push the market down and it actually reacted at this one instead of this one. So I think a lot of stop losses were here after they took in buying positions. They had their stop loss slightly below, and then they went and then they dropped it into this level, and they just had it shooting up. So marking up our levels over here, you already know that we are interested in this current level that it formed, right, which will bring us to around about this zone right over here. But I wouldn't love this type of zone, because you see we're ignoring all of this, right? So instead of that, we would actually come and mark up this zone right over here, and then we go and mark up the one that it's currently sitting at, right? So let's see if we can actually draw a little trend line. I would like to start from this zone going up to the top like this, but you can see that I would not use that trend line in a minute, because before the market gets to this zone, it would have reacted a lot. So I'm going to ignore all of this and just use these recent ones. That's how you actually just think when you're drawing trend lines. You don't just draw them randomly without having any sort of direction, right? So I'm going to choose this one right over here, and this makes more sense because my trend line is close to the current market price, and the market can actually reject at these zones. So we're saying that if we open the market with such a good rejection at this trend line right over here, you already know that we are still going strong with the trend, buying positions right over here. Let's go on to our 4-hour time frame, and that zone, we're back to that particular zone that we spoke about in the previous weekly analysis, which is this one, and it's forming a little zone right also at that particular level, right? So right over here, we did notice that the market does indeed have a gap. Let's not forget it does have a gap at the zone, but it doesn't mean that it should just start from this current point shooting up to the top so that it can go and close up the gap right over here, right? So you can see that the market is kind of like rejecting, even though we don't have a second leg right over here. Normally it comes to the zone, goes up a little bit, gives us a second leg with little retracement, threatening. It just doesn't shoot up to the top, and then it will then push up over here. So we would like to mark up this level right over here. So this level, we've had it since last week. I even sent this type of analysis in the free signal group where I said that if the market rejected at this level, we're going to sell. So a lot of people did capitalize on the selling position and they sold. So currently now we are saying if it breaks out of this level, we're going to what? We're going to actually buy. This is what we're going to buy, and then we're going to target this zone, probably this zone right over here, because you can see we have a rejection before we target this level right over here. So we'll be targeting this zone, right? So if it breaks out of the zone, so we want to look for it either breaking out for our first buying positions or it coming to reject again at this level, preferably bullish engulfing candles. Those are the candlesticks that I like for confirmation. If it breaks out, we already know that we're targeting this level. But if this market breaks out of this zone again, right? If it does break out of the zone, I think that the buyers are going to be like losing momentum, right? They're going to be like really, really losing momentum because it would have broken out of the overall trend, right? If it breaks out of this zone, right? So then that is when we might really start looking for selling positions if it does break out of that zone. But if it does not, rejects here on these zones, we're actually just going to capitalize on it. And you can already see that we can have a little trend line also. When we have a little trend ranging, we can draw a little rough trend line over here like this. We can actually use this as our little guide. So I don't know how it will play around. It probably like this, and then comes here and then breaks out. If it breaks out of the trend line, we're waiting for a retest at this zone and then capitalize for it to go up to the top. But if it does break out of this trend line, you already know that the buyers are going to be in control of the market, right? If we go on to an even lower time frame, which is the 1-hour time frame, you can see that we could use use, instead of this level, we can use this one over here because we have wicks right at this zone, right? So we're saying that if we come into this zone right over here, we can still have a rejection. So we don't want to start looking for buying positions whilst we're still within this zone. We want to look for buying positions when we break out of this zone. So long we are in here, we can come and see a rejection here. We can write it down again back to this level for it to close off this gap over here, and then probably see a buying signal from this gap after it rejects. It's really simple. Listen carefully, right? So we're saying the market is at the zone. I don't know how it opens, with gap, without a gap, it doesn't matter. If it comes to this zone, we want to wait for it to reject in this zone. If it rejects, we write it down back to this gap that it had, and we start looking for buying positions. Or if you don't want to go against the trend, you cannot sell it. You can just wait for it to go back down if it does. And then if it just opens and comes back to the zone without going to the top, we want to see it rejecting at this zone first before we go in for our buying positions. Or if it goes here and doesn't reject, breaks out at this zone, we want to go in for our buying positions targeting this top. So it's just situational analysis. Whatever happens, we can capitalize from that, right? Nothing too complicated as usual. So that's about it with the weekly analysis. Remember, to be a good trader, always use proper risk management. If you did enjoy that video, don't forget to hit the like button, turn your post notifications, and subscribe to the channel. With that, it's been Tino, and I'll see you in the next video. Peace.